Hello, Oracles. Well, it's nice to be able to wear this shirt today on an actual day because we're actually green. I mean, it's about time. So it's pretty nice to see this. However, in horribly unrelated to Tesla news, Snapchat pre-announced that they are going to be below the low estimates for Q2, and Tesla's down 2% after hours on that news. Love how Tesla is related to Snapchat, but hey, that's just the market that we're living in right now where nothing makes sense and monkeypox is now filling our news feed with more fear. Because that seems like that's all we are seeing right now is fear in the news. All this fear that is out here is part of what's driving the market down. Now it looks like retail is really diamond handing hard when it comes to the market. Meet Kevin just put out a video discussing some of this himself. And it's like, retail in the past has always, been the last ones to fall, paper handing, and then they don't buy back in. So, retail never really catches the high and the low end, whereas hedge funds and institutions do. They'll catch the very high or the very low, and that's how they make so much more money. Meanwhile, retail is usually trailing the trends. So we'll sell after everybody else, and then we'll buy back in after institutions. So our gap is like this small, whereas everybody else's gap is this much bigger. So our gains aren't as much. But this time around, we are holding like champions. So congratulations to all of you out there who are still holding through this and buying through it on top of it. So it's not just that we're holding, we are also buying, which is huge, and that will end up reflecting in our portfolios in the future. And one thing I wanted to discuss today was labor. A big piece of what we're about to go into in the future is going to be labor. A lot of companies out there, we're seeing that they're very heavy with inventory, and companies are becoming more and more efficient. And so the companies who are more efficient don't need to hire as much labor. But when you're looking at a company who is efficient and hiring labor, that is a huge sign for growth. Because if this company is as efficient as they are and still hiring, that means that they have massive, massive growth that they are working on. Tesla is one of these companies. Tesla is hiring like crazy. They just announced that they are going to be hiring over in Shanghai for R&D. Now, something that we have talked about in the past is the fact that China and Shanghai have been speaking about how badly they want to be able to design their own Tesla. And this has been alluding us to the compact car. And we've talked about it on here many times. A lot of different signs are pointing to the fact that China is going to be designing and producing the compact car. And this huge hiring wave coming in for R&D could be part of this. We know that they are working on an expansion over there, but this extra piece could be what is going to go into the compact car. So again, we have no specific details on this, but these are just little pieces of the puzzle that I'm putting together that are leading me to believe that we are going to be getting a compact car announcement, if not by the end of this year, sometime in early 2023. And now when it comes to a lot of these companies that are holding a lot of inventory, again, I work for retail and we are carrying a lot more inventory than we did before, and we are running sales on product that we've had for more than 2 years because we're trying to cut down on our old merchandise. And so I have no doubt that there's many other companies out there that are following suit. And in doing so, a lot of prices are going to come down, as Kathy Wood said. So when the prices are going to come down on all of these things, we now see deflation going on. And technology in itself is a deflationary product. So we're going to see perhaps deflation going on in the future. So we might see inflation revert so quickly that I think we might see a turning point, and this is just my current predictions as of this moment, that the Fed is going to be raising rates, and then we're going to see inflation turn the corner, and turn the corner so hard that the Fed is going to have to reverse and actually lower rates a little bit because inflation came down too far. That right there, if that happens, that is going to be my key buying signal for the future. Because why did stocks skyrocket as much as they did during COVID? Because the Fed dropped rates to nearly zero. So the moment the Fed turns rates around, that will be a huge buying signal. That's what happened in 2018. The Fed was raising rates up, and then they flipped on it and they turned the rates and turned them down. Then the stocks took off again. This, I think, is going to be our big buying signal for the future. Again, we don't know for sure that's going to happen. I'm going to continue to dollar cost average into this because I still think the prices we're at now are great buying prices. But because the market is so uncertain, who knows what's going to happen in the future? We could still continue to drop significantly further. We might see Tesla fall down to 420. So if that's the case, I want to make sure I have enough cash saved up on the side to be able to invest. So my strategy right now is I'm trying to balance my cash at about 8% while still adding to my favorite stocks. So the stocks I'm currently adding to on a daily basis are Tesla, Square, Nvda, MP Materials, AMD, and Googl. I also do add $1 into Shiba and Dogecoin every day because, you know what, I don't know what the future is going to bring, and $1 a day for each of those is not going to break the bank for me. And I do have Bitcoin and Ethereum that get added to because of the BlockFi rewards card that I have in my Cash App card and lots of different rewards. So I get free Bitcoin and Ethereum on a regular basis, so I don't add any extra to those. So that's just how I'm playing it right now, but I'm still keeping my cash reserves at around that 8% mark, and I may continue to build that up just because, again, I can kind of play both sides of the coin here. Because we have so much uncertainty, I want to leave myself enough wiggle room to be able to play that volatility. And sure, if we fall significantly further, the investments I make now will lose value, but I do have the confidence that they are going to come back. So it doesn't really make a huge difference to me because if they fall further, I will just add more to offset some of those losses that I'm getting. So either way, it was nice. I was actually able to add quite a bit more to Tesla today, and I got myself to the point where I added another full share. Kind of kicking myself because I wish I had waited a little bit longer. We got that early dip at 633 and then another dip down under 640. If I had done that, I would have brought my cost basis under 800. But I didn't, and I added at 664, so my cost basis is 805 right now. Not a big deal. I have a feeling I'm going to get another opportunity to bring it down further, so I'm not too concerned. And another share will put me at my 10, so if I can have 10 shares with $1 with a cost basis under 800, I will be a very happy camper because we have a lot of good things going for Tesla in the future. We'll talk about more of those in the morning. But I have a strong feeling that if Tesla doesn't turn around with the stock price this year, it's really going to turn around next year. This is one of those cases where they're just building up all the momentum all at once, similar to what they did going into 2020 when they took off. So again, lots of unknowns, don't know any of this for certain, but that's just the way I am seeing it and the way I'm playing it. And now as far as any other investments, I ask, what do you invest in a market like this? What is there where you can actually make any good money? So I truly don't know. I've gotten some suggestions by Chris about some bonds to get into, so I'm going to look into these. I've got BND, SHY, TIP, VTIP, and BSV. I'm going to take a look into those. I honestly don't know anything about them, but these were just recommendations to get into as far as potential cash plays when it comes to a bond. So otherwise, cash, despite inflation being where it is, could actually be a good place to have your money right now. For me, I'm actually saving up a good chunk of cash because those of you who have been following me for a while know I'm looking to buy a house and invest into some real estate. So for me, it's not just buying a house for myself, I'm buying it for cash flow generation. So I'm looking for a multifamily. And seeing as how the market is going, we might see a strong pullback in real estate over the next 6 to 12 months. So I'm saving up as much cash as I can to see when that housing market is going to pull back to be able to buy some real estate myself. So that's kind of where I'm setting my money right now, is more cash heavy to be able to invest in real estate for cash generation and cash flow in the future. Otherwise, like a QYLD for me for some, dividend stocks is a play to get into. But otherwise, there's really not much. These times right now are the times where you really don't want to look at your portfolio as how much have I gained today. Because you're not. You're just not going to gain anything today. You're not going to gain anything for a while. And you've got to resolve yourself to that and just realize this is not the time to look at your portfolio for gains. It's just not going to happen. You got to be realistic. This is the time where you can look at what opportunities do I have to buy and where can I best put my money now so that in the future, when the market does turn around, I will be able to get the most gains out of what I invest now. And that's the hard part because we don't know what the future holds. So quite honestly, this is the way I'm doing it. This is what I see. Let me know in the comments below where you guys are putting your money right now. If you're holding it in cash, if you're dollar cost averaging, if you're just holding through this, if you're saving up for something in the future, or what companies you're investing in now to be able to hold through for the future. Let me know in the comments because I know a lot of us out here are asking the same question. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.